Welcome back to our art investment series. In today's video, we're diving into Chapter 14, How to Build an Art Investment Portfolio. By now, you're familiar with the basics of art as an asset and have learned how art fits into a broader investment strategy. But how do you actually build an art portfolio that balances risk, offers growth potential, and aligns with your financial goals? In this chapter, we'll walk you through the essential steps of creating a well-rounded art investment portfolio, including how to choose the right pieces, manage risk, and evaluate the long-term potential of the works you acquire. Whether you're just starting out or looking to refine your existing collection, this video will provide the guidance you need to develop a successful strategy. Building an art portfolio is a lot like creating any other type of investment portfolio. You want to diversify across different asset classes, manage your risk, and take a long-term approach. However, unlike stocks or bonds, art requires special attention to factors like artist reputation, market trends, and provenance. Let's break down how you can get started. Before you start building your art investment portfolio, it's important to define your investment objectives. Ask yourself, what do you want to achieve with your collection? Are you looking for capital appreciation over time, or do you want to invest in art as a way to diversify your broader portfolio? Maybe you're simply passionate about owning art and want to enjoy the aesthetic value, but with the added benefit of financial return. Your objectives will influence the types of art you purchase. If your goal is long-term capital appreciation, you'll want to focus on works by emerging artists with high potential. If you're more interested in stability and preservation of wealth, then blue-chip art from established artists like Picasso, Warhol, or Klimt may be a better fit. It's also important to recognize that art investment is typically a long-term commitment. While short-term fluctuations can happen, art tends to appreciate over the long term, especially when carefully selected. The more aligned your portfolio is with your personal goals, the more enjoyable and fulfilling your art investment experience will be. Step 1. Diversification. Don't put all your eggs in one basket. One of the fundamental principles of any investment strategy is diversification. Just like with stocks, bonds, and real estate, art is best approached with a diversified portfolio. By spreading your investments across different styles, periods, and artists, you reduce the risk of relying too heavily on any one asset. In an art portfolio, diversification can mean a variety of things. Artist diversity. Focus on acquiring works from both emerging artists and established names. Emerging artists are often more affordable and have high growth potential, but they can also be riskier. Established artists, on the other hand, tend to offer more stability and long-term appreciation. Medium diversity. Different types of art media can behave differently in the market. Paintings, sculptures, photographs, prints, and digital art all have their unique characteristics and appeal to different types of buyers. By investing in different mediums, you can help balance your risk. Geographic diversity. Art markets are not uniform across the globe. While New York, London, and Paris have long been dominant, emerging markets in places like China, India, and Africa offer new opportunities. Diversifying across regions gives you access to various markets with different economic dynamics. Period and style diversity. Incorporating art from different periods, like modernism, impressionism, and contemporary, and styles like abstract, realism, or minimalism, helps protect your portfolio from changes in market preferences. Diversification minimizes risk because if one segment of the market underperforms, others might compensate by doing well. It also provides the potential for higher returns, especially when you identify emerging trends before they reach mainstream attention. Step 2. Understand the artist's reputation and market trends. When selecting works for your portfolio, it's crucial to understand both the current market trends and the reputation of the artist you're considering. The reputation of an artist significantly affects the demand for their work, which in turn impacts its future value. Established artists have a track record of sales, which provides a better idea of their investment potential. However, emerging artists can offer higher returns if they gain prominence over time. Identifying up-and-coming talent requires careful research and the ability to forecast future demand. Look at the artist's exhibition history, awards, and critical reception, as well as how their work fits within the broader art market trends. Keep an eye on auction results, art fairs, and gallery exhibitions. Auction houses like Sotheby's and Christie's publish reports on their sales, which can help identify which artists are becoming more desirable. Similarly, art fairs like Art Basel in Miami or Frieze London showcase the latest trends and can give you a sense of where the market is heading. It's also worth following art critics, curators, and galleries to stay ahead of emerging movements and under-the-radar artists. Many high-value works were once relatively unknown before gaining recognition in the art world. Step 3. Assess the condition and provenance of the artwork. Before buying any artwork, one of the most important steps is to evaluate its condition and provenance. The condition of a piece refers to its physical state, and it can significantly impact both its aesthetic and financial value. An artwork that's been poorly maintained or restored might not appreciate as quickly, and it might be harder to sell in the future. For instance, paintings that have been exposed to direct sunlight or unstable temperatures may have fading, cracking, or other issues that reduce their value. For sculptures, corrosion, scratches, or chips can similarly decrease their marketability. Always consider professional conservation and restoration before making a purchase if the artwork shows signs of wear. Provenance refers to the documented history of the piece's ownership. A well-documented provenance adds authenticity to the artwork and can raise its value. Pieces with verified provenance are much more desirable and easier to resell, especially if they have previously been owned by prominent collectors or appeared in significant exhibitions. If provenance is unclear or dubious, it could signal potential legal or ethical issues, such as stolen art or pieces acquired through dubious means. Due diligence in researching provenance is essential to protecting both the value of the piece and your reputation as an investor. Step 4. Stay active in the art market. Building an art investment portfolio is an ongoing process. While buying art is the first step, it's equally important to monitor and maintain your portfolio. Regularly assess how the artworks in your collection are performing in terms of both value appreciation and cultural significance. Attend art auctions, gallery openings, and art fairs to keep your finger on the pulse of the market. Not only will this help you stay up to date on price trends, but it will also allow you to connect with other collectors, galleries, and artists. Networking in the art community will give you a deeper understanding of what works are generating interest and demand. It's also important to keep track of any art price indices or reports published by companies like ArtPrice or ArtNet, which provide detailed data on the performance of the art market. These platforms can help you assess the current value of your pieces and give you insight into their long-term investment potential. Lastly, be patient. Art investments often take years or even decades to mature. Resist the temptation to sell pieces too soon, and always think long-term when managing your art portfolio. Step 5. Work with professionals. If you're serious about building a high-value art portfolio, consider working with art advisors or experts who specialize in art investment. Advisors can help you identify the right pieces for your portfolio, provide insight into the art market, and ensure that your purchases align with your financial goals. Art advisors typically have strong connections with galleries, auction houses, and artists, and they can provide you with access to private sales and exclusive auctions. They also have expertise in evaluating the investment potential of individual artworks, which can help you make more informed decisions. In addition to art advisors, you might also want to work with an appraiser to help determine the value of the pieces in your collection, particularly if you're looking to sell or insure them. Appraisers can provide professional assessments of your artworks, ensuring that you have an accurate understanding of their market value. Step 6. Selling art and managing returns. At some point, you may decide to sell a piece of your art collection, either to reinvest in new works or to realize a profit. The process of selling art is different from other investments, as it requires understanding the art market's liquidity and pricing mechanisms. Art tends to be illiquid, meaning it can take months or even years to find a buyer for a piece. The timing of the sale is critical, as the market for a specific artist or art movement can fluctuate. It's essential to evaluate market conditions before selling and to work with a reputable auction house or gallery that can connect you with buyers. When selling art, always consider the transaction costs, including auction house fees, gallery commissions, and potential tax implications. In many countries, the sale of art is subject to capital gains tax, so be sure to consult with a tax professional to understand how your art sales will impact your overall tax strategy. Building an art investment portfolio is a rewarding yet complex process. By following a structured approach to diversification, research, and networking, you can maximize your returns while also contributing to the broader cultural landscape. Art is both an emotional and financial investment, and when managed properly, it can significantly enhance the value of your overall portfolio. If you found this video helpful, don't forget to like, subscribe, and share it with others interested in art investment. Drop your questions or thoughts in the comments below. Let's start a conversation. Thanks for watching, and we'll see you in the next video.